Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. And I please get a screen and audio check in Discord and YouTube. Okay, thank you, Steven. Are we good here in Bookmap Discord Trader Lab as well as YouTube? Okay, good. Well, all right. Well, thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about, one moment, please. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a community of like-minded traders who have come together to leverage their collective experience. The trades you will see here in the stream are based on structured trades. You can download 60 PDFs of these. They're available in the Bookmap Discord Trader Lab community, as well as a library of webinars that you can review to see this process over many different market configurations, as well as some of them are up to 5 hours long of real-time narration and transitions, which you might find interesting. Also, we have something special. We have a special event going on at Bookmap, and it's open to everybody. It's going to be in the Bookmap server. You will need to verify your Discord account, make sure you're not a spammer and that kind of a thing. So, it's funny. Every time I say spam, I'm thinking those cans of spam. Anybody know what those are? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on structured trades, and they're available to all of you in the Bookmap Discord Trader Lab. Of course, you do have to verify who you are. Also, I want to mention to you guys, if I haven't, that there is a free digital version of Bookmap. If you wanted to get your hands on Bookmap and you've kind of been thinking, well, is this something that might be helpful? I think the first step to even determine whether Bookmap may help you would be to take advantage of the free download of the digital version. It comes with data also, and you can kind of play around with it. But the other part of that is if you are a Bookmap subscriber, even with the free version, you can attend all the special events that are specifically for Bookmap subscribers. And that includes the Bookmap Academy, where you can get mentoring, coaching, bring your trade setups, things like this, and work with experienced traders to help you improve your game. So there's a lot more available in the Bookmap server. I encourage you, if you're looking for quality education, that maybe stop by. Now, we're having a special Pro Trader webinar series. It's going to be in Discord only. It's starting today. And these traders have not appeared before, so we're always trying to bring something different so you can kind of check it out. There's no one way to trade. I think we all know that, but we also know there's a lot of ways maybe not to trade. Unfortunately, in our development, we don't figure those things out. And often for retail traders, that might happen when it's too late. So the idea of all these different traders that are in the webinars is to show you how different traders use these processes, how they use order flow, maybe even how they manage trades and their setups and things of this nature. And I always think it's good to look at these things. But like everything in trading, you have to see if it aligns with you psychologically, and you have to vet it for yourself. Same thing is here in the Trader Lab. Trader Lab, it's about building out the business side of trading, understanding how the market works, why it does what it does, and how, using tools, you can get in alignment with it. Now, let's go take a look at what we got here. Now, if you remember on Friday, we had what was called a neutral day. Now, very simply, what a neutral day is, the market takes out the first hour high and the first hour low. And, you know, and it was a very rotational day on Friday. You might say what the market is doing, and we always can, in hindsight, we could always kind of draw, you know, maybe I don't want to say a conclusion, but we can get some ideas. When the market's two-sided like this, it's really in the consolidation phase. Its two sides are active, but nobody's really running with the ball. We had a 50 basis point cut by the Fed, and when you think about that, that's somewhat bullish. However, why isn't the market continuing to go up? Well, I don't have the answer for that, other than maybe the market anticipated the cut. It did not necessarily anticipate 50 basis points. Maybe it did, maybe it didn't, but we were certainly anticipating 25. Now the market's digesting that input, and we have to see, are the buyers going to now extend the rally, or are we going to consolidate? And if the market is long, ultimately, do we break down from here? So the market tends to get directional and then get rotational. Go back to directional and rotational. So today we are very much behaving like we did on Friday. We're rotational. However, statistically, we are favoring the upside, and that is not a recommendation, but statistically we're favoring the upside, and I'll go into that a little bit. And also, the market has been compressing. So if you look at today's rotation, so we'll talk about that a little bit, they're getting more compressed. When you get compression, that's like, think of it like, in trading, we call those things like consolidations or coils, and a coil is like a spring that gets wound. Well, there's energy in here. And at some point, one side or the other, and I'm not here to say which one it will be, though I do think we're leaning north, doesn't have to, come out the top. There's going to be movement coming out of here potentially today. And of course, I can't say it will because it's not my job. My job is to try to get in alignment and follow a trade plan that is in alignment with this. So let's go take a look. Now, this is the RTH Open. By the way, if you have questions, please post them. I'll do my best to get back. Spam. Okay, great. Sorry, I was just looking at the notes. I was reading about spam. The thing about spam is that spam was, shall we say, from a culinary point of view, was not held in high regard. Does that have something to do with spammers? I'm going to have to look that up. What was the origination of spammers or spam? Is that related to the product spam, or is it something different? Now you got me thinking about it. Okay, this is the RTH Open. Now, we're opening RTH Open right against yesterday's high. This is the ETH volume point of control, your retail price. There's some interesting levels in here. This is a naked volume point of control that was left behind. Hold on. I think from Friday. I can't see all my charts here. And no, that's not correct. This was a naked volume point of control that was left behind previously. This is Friday's naked volume point of control. This is like the highest volume retail price from Friday. This is Friday's settlement. And we have the ETH mid. All these have high probabilities. Overnight volume point of control is retail. Yesterday's high, ETH high. This is a high volume area in an intermediate time frame. Think of these like retail prices, 85. So we're looking for, and this has a high probability, the ETH high. So we have, here, let me show you how this might work. If you open here, here's what we got. Yesterday's high, and this is a retail price. And correct me if I'm wrong, guys. Is this naked volume point of control at 77-ish? Is that a valid Naked volume point of control, guys. Okay, thanks, Moonwalker. It's good to get a response. Thank you. Okay, so market opens. Now, there's a couple possibilities, of course. We're going to look to see if somebody actually takes directional control of the market. So the first thing we want to do is we want to see which side initiates. Now, we know we're opening high and we're opening by yesterday's high. So you might think that there's going to be stops above yesterday's high that we're going to get these guys, right? So, of course, not necessarily of course, but we see our seller right here. So this sets up the possibility. Now, this is a tough trade today. When you open next to at a previous high against it, you're probably not in too much of a hurry to take a short. So let's mark this and call this the opening swing high. And it's important, and I always say in Trader Lab, mark this. Why do you want to mark it? Whoever's in this leg is going to have their buy stops here. So let's look. This is a developing volume point of control. It's basically, in the profile world, this is like retail. So wherever you have volume, the highest volume for the day as it develops, that's what this yellow line represents. And now you'll notice there's more volume down here. So that's why it's shifted. So if there's, and this is buyers and sellers interacting, this is a consolidation. What happened up here was a consolidation, but it was only sellers. This is what it looks like in the profile. And what really is happening here is right here, there were buyers, limit order book. That's what caused this micro rotation. If I look a little closer, you'll see there's volume here. Sellers are there, buyers are here. That creates this. In the middle of it, or wherever the high volume is, you can see it there. That's a high volume node. And I call this micro structure. So I'm going to label this. I call them variable high volume nodes. And because it's a high volume node and it's variable, I thought that was a pretty good name when I made it up. So now this is the current high volume. I'm going to label this one because early on, this is very sensitive and it moves around all over the place as the volume is moving. Now, think of this like a store and it's shopping. So the participants are the shoppers, buyers and sellers, okay? And if this price is too high and we leave it, that means right now you can't buy an S&P or sell an S&P here. If you want to buy an S&P, this is the retail price. So the sellers are willing to sell to you here. And if you want it, that's too high. So we come down here. So what the market's going to do, it's going to try to figure out what is this worth. And that's part of our joy because we're trying to figure it out also. So let's look. Too high, retail. Now remember, we have this sitting here. So what I'm looking at this and I'm just telling you how I am. I'm going, I don't like this up here. I know there's stops here, and I know what I did on Friday, and I thought the market did a pretty good job, even though it was two-sided traded of going to the upside. So if the market is somewhat long from Friday, then maybe we'll come down, take out some longs, and then head up. But I'm clueless. I mean, when I say clueless, I'm saying is I can't predict anything. So I just try to let it sort out. So I'm looking at this and I'm thinking, wow, this looks like a short. I didn't take a short. I'm just sitting here going, why didn't you take a short? So you ever have that conversation with yourself? So what's sitting here? Opening swing high, right there. So look at this. We come down and I'm thinking to myself, that might have been a decent short. But I am very conflicted. Now, once we cross over here and we take this out, the opening swing high, and we tag yesterday's high. Now there's another level. Wow, where'd it go? Great. Hold on. 85.50. Do I have that in here? Yeah, I do. Okay. So we hit yesterday's high, which has a statistical probability, and then we come the other way. And when this happens, I post in Trader Lab, we're in mean reversion. This means do not trade in the middle, only outside in. And then we still don't know what's going on here. What I know is I cannot trade here. And here's why. We start out, it is directional. And as far as I know, wherever it's going to go, it's going to go. When I see this velocity and I come all the way across, all we did was take these guys out, the shorts, remember, in this leg. So they're out, and then what? Are we going to keep going? No, we come right back in again. So now it's outside in trading. So that's mean reversion. And you'll notice what we get going here. Two-sided trade. Now, statistically, here's the first trade. I got to show you this. Okay. So this is what I'm looking at here. So here, not sure what's going on, never sure what's going on. Up here, pick the stops out, come back here. Now, there's no doubt for me that this is a two-sided trade. So now, what was too high? This. Where's my outside? It's out here. Where's my targeting? Overnight mid is a high probability target. Overnight volume point of control, which we got right off the open. Yesterday's high is a high probability target. We one-ticked it, and it's kind of like scratch your head and wonder what's going on. This is a naked volume point of control. Something's not quite right here. This is a target coming up and then above. So this is a target coming down. So the first trade I took, now this is too high. Let me start marking this up for you. Now this is not, I'm going to say of all the things, and I always mention this, I'm going to say it hasn't changed and I wish it could. This is my least favorite condition to trade it because it's very easy to start trading in the middle. And then you're going to end up in a chop. So here's what I know right here. Let's look at what we know. Let me come back here a moment. I'm going to start bracketing this with the edges. So the edges, the outside edges, are these little distributions. So if you look here, you'll see a distribution. And what this distribution represents is this. Oh. So basically, I'm bracketing this consolidation. And this one up here is the same process. So let me bracket this one. I just want you to be able to see what it represents. So when you're looking, you see this, inside of this is what a consolidation looks like in volume. Where you have the high volume, think of that like a retail price. So in other words, most of the volume in here is there. So that's resistance. This is support. So now I don't know what's going to do it, until it comes back across. So let's look at that. And I know this was too high and the opening swing high. Let's remember that. I come up, I get yesterday's high. So I'm taking you into the structure. Now I break here. This is now support. Now, I don't know it's support until here. Now, this is a buy, a long trigger. Here's the trigger. So let's watch the trigger. The buyers came in here. The buyers are down here in the limit order book. You can't see them because they're passive. The reaction, though, is what you see. There's the delta. There's the buyers. The opposite side of this, we have selling icebergs, and I see buy stops coming up. And right here, what's going on? Nothing. I have passive sellers. Break, pull back, short. Now, if you can't get short here, you would be getting short in here, and you're only going here. So this is a very limited opportunity. It's almost scalping. So let's watch it. So long there, and you're trying to go there, and then to come across. That's what mean reversion is. You come down here. Remember where the trade fails. By the way, why is this important? Because there were buyers here. Now, if I get long, notice where we came. See, the buyers are here and the buyers are there. So if I get long here, I'm not putting my stop there. I'm going to give it about 2 ticks because the market could come under here, do a stop pick, and the buyers that were here will go, oh, really? You're giving me another chance? And they buy it again. And you're trying to come back here. Same thing over here, trying to come back here. And that's where you're going, right there. That's your scale if you took a long. Now, and then we have a report. Forgot all about that. We come out here. And where are we trying to go? Where's our resistance? Up here. So let's see. We took this out. Support, support, report. Come down. Now, this is a target, remember? So for me, there's really nothing going on here. I'm trying to get outside edges. So this is a very hard trade for me. I just don't do well in this because I have to try to stay out of the middle. And so I'm looking for outside edges. That's all I've got in this. And I know for me, usually what happens with me is I don't know we're in mean reversion until a couple of rotations have gone by. And I could easily take 1 or 2 trades in that and take stops because I'm thinking it's directional and it's just doing this kind of stuff. This is resistance. Notice where we come. Notice the velocity of this stuff. So it's very hard to trade. Let's look at it. Down to here, support, back up here. This is resistance. We have something at 9 o'clock called the IB30. The IB30, in other words, which side do you make a high or a low on? Well, at 9 a.m., we make a new high and we make a new high. That sets up the first hour's high, has about a 70% probability we'll take that side out versus the bottom side, and it could be either one. So that sets up this 85, which is another high volume area. So we have this as a target, this as a target, and that. That becomes our targeting. And taking this out, this, at some point. We haven't taken it out yet, I see. Okay. So we break here. So what you're trying to do here is get long to come inside and try to rotate outside. That's all this is. And nobody enjoys this. I mean, I'm sure somebody does. I don't, because I don't do well in this. I end up taking a lot of trades, and I don't like that. Because if I'm taking a lot of trades, that increases my probability of taking more stops. It's just more probabilities of not being in alignment because it's chop. It's very easy to maybe take a short here, get stopped out, and it's just very hard. So I'm sure there's others that do much better than this than I do. I just don't like it. So because you don't know where the outside edge is. ETH high is a target, and then we are looking for this. And we get that right here, I believe. Can't tell. No, right. This is the high, 85 is a target. There's no precision, by the way, in this. This is our target in this. So outside in trading. So I will tell you, for me, If the range isn't good and it's just slop, I'll take a few trades, and I'm not compelled to trade. I'm really more compelled to wait for better trades. So I don't do a lot in this unless I have good range. But I do know there's about a 30% probability we'll take out either both the high or low of the first hour. So it looks like we're leaning towards taking the first hour high out, which has a higher probability. Then looking above, I don't have much up here. I really don't. So I have to see what happens from here. Chances are, and this is not a recommendation, if we come outside, we may, after we squeeze out some shorts, come back inside. So mean reversion. So I'm anticipating breakout and then have to see how far it goes. And then if I get rotation and we run out of, it's only buy stops and I really don't have new buyers because we're kind of consolidating, then I'm going to be shorting this to come back inside and potentially fall out the bottom. Not a recommendation. It could do anything here. Very difficult. How are we doing in YouTube, guys? Please give a thumb up and subscribe to the channel if you're visiting. Please remember there's a special event in streaming going on this week. So you can see how other traders use order flow with the high tier tool like Bookmap, trade management, maybe even setups. You do have to, there's a link in the bottom of YouTube if you want to access this. You do need to confirm your email address to access this Discord only sessions that are going to be all week. It's a special series, and if you guys are interested, I'm going to say come on over. There is no cost. Also, if you're interested in the Trader Lab community, you can use the same link, verify your email address, come on over to the Trader Lab, download the 60 PDFs of these structured trades, and also access the community and library of webinars. All of that's available at no cost. See where we're coming here? So this is not something I want to trade. I'm just saying is I can't trade this effectively because of its configuration. This is now support here. So this is now the retail price. If I'm going to get short, this needs to be further away because this is actually a target in mean reversion. This is called mean reversion, but that's the mean or the mode. So there's just Zippo. So for me, I'm not a scalper. I just find it doesn't pay for me. So I just don't do it. Or I should say I don't do it often. When I think of scalping, I mean, everybody has a different definition for a scalp. For me, if I risk 2.5 points, where am I going? Here? Or maybe over here. I mean, I could fall out the bottom. I mean, that's all possible. I am thinking that's possible today to have two-sided trade, but that doesn't mean I have a trade to take just because of what I anticipate. I'm not here to keep busy. I'm really here to sit and be patient. And if I don't have a trade that makes sense, if I don't put one trade on for the day, I'm good with that. And you might say, well, why? It's because I only want to interact when I have an edge. And as these rotations compress and I have this as an obstacle, I might only come here and then squeeze up. Why would I take a short here? Even though I have some pieces of it. And I know I'm in rotational trade because this is where I have to scale. So the way I measure myself on days like this is just following a trade plan, nothing more. There's nothing more to do in this business. You have a plan. You also have to have parameters that qualify your trades. For me, range. So if this was sitting down here, this trade would be viable for me to go from entry, which would be like here, down to here. But when it's here to there, that's a problem. And then to here, this is about where I'd be looking for. I can't trade that. Not with a clear conscience and not without violating my plan. And if the market keeps going down, we always think, well, why didn't you take that? My thing is because my plan says don't take it. You might not find this very exciting, but the business of trading is really not to keep busy or get a dopamine fix. It's really just about your trades and knowing where you're going to trade, when and why it qualifies or doesn't. So I can't trade this because it doesn't qualify. Not that I can't read a rotation. It's because this right here is support, and this might be as far as we go, and then come up here. It just doesn't work. Anyway, do you guys have questions while we're sitting here? You can see the structure. Outside, 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 here. So we have this, 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 and out here. And I cannot get short. So, and I can tell you, I cannot get long either. So in mean reversion, that's the mean. If it was down here, I would be able to take it, but this then is the obstacle. So either way, this is the best I would have if that was sitting here. When I say that, what I'm saying is to scale. So this is really my obstacle. This is an obstacle. This is an obstacle. If I get below here, then this is the next one. But I can't trade this. So, but I can see the structure, you see, but I can't take it. Because this right here, we could just come in here, come back here. So it's this to this, maybe, but that's not a qualified trade in mean reversion. Trader Lab, this is not a VWAP to VPOC trade. I mean, it might do that and come out the top, but we're not in a directional market. This is a mean reversion market. So there is no, for me, you have an edge and you have a vetted trade here. You can take this is VWAP to VPOC is a structured trade in a directional market. It is a mean reversion trade. This is still the mean, and this could go from here to here. It certainly can. And even out the top, it certainly can. But it's not a qualified trade for me. And again, I always have to say what I do is not necessarily what anybody else should do, because everybody comes up with the plan, and the plan has to reflect that statistical edge, not one-offs. You know, many retail traders, they'll see it's common, by the way. You know, we see behavior and then we think, oh, that's a setup. Not necessarily. Unless you have a large sample size to see that this specific behavior, mean reversion, has an edge that you would get long here to go there. For me, it does not. So I have nothing here. This is just rotational trading. Any questions, guys? This is mean reversion. Underline the word mean. For a lot, my bias is not changed. The fact that the VPOC is here, we're just, if you notice what we're doing here, the question was, does my bias change? No, my bias is mean reversion. So it's this rotational trade. And somebody's going to take the ball, you know, and there's longs in here. Chances are, possibly, we're going to come out the bottom. But that doesn't get me on a short because this is not qualified for me. So it doesn't matter to me. You know, in other words, remember, what you have is this to this to this. Not, and again, I'm only talking about me because I don't give trade recommendations. You know, I take stops, you take stops. You don't need me to help you with that. This is not a long for me. This is behavioral, but it's not a long. Statistically, we're looking at it coming out here. A lot of things suggest up, but I cannot get long here because we just as easily rotate down here because we're in this thing. So nothing. I just sit here. So to answer your question, Ben's asking me, how do I trade with icebergs and stops? That's a good question. They are a piece. So, for example, we see the icebergs are really on both sides of the trade today. That doesn't tell me more than what I can read here in the order flow. It tells me who is active. The other part of it is with the icebergs, if I see thousands of icebergs accumulating, that is going to get my attention. But the fact they sell is not a reason to get short because they're like different participants with a different time frame and agenda. The stops, though, I find that really useful. The way I look at the stops is what's really important is delta reflects stops. So if the market's going up and I'm seeing buyers buy delta, and here's 82 buy stops, are those buyers literally or are they buy stops coming up? You say, well, if I see the stops and I don't see buying above it, and then I see my sellers, that's just a short squeeze. And then you could see here, we didn't quite get back here. What happens here? Stops. Stops. This is an iceberg under there. Absorption. This is a sweep. So right here is 109 buy stops. So, and then 4. So and I don't see it happening right here, but I look at stop divergence. It's the only thing I use from my experience with indicators. It's if you make a higher price, you know what divergence is, make a higher price, and we don't have it here. And let's just say this 6 stops were up here. Well, then I have stop divergence. And if I don't get buying above it, it was exhaustive. Then that would help me see a trigger. So the way this works here is just, I hope that answers your question. In fact, here's an example of stop divergence. Let me try to show it to you. Market's coming down. I see 188 sell stops. We make a new low. There's only 20. So think of it this way. The momentum is, these are market orders. That's the delta. That's the bubble. Then I come lower. There's only 20. That's divergence right there, right? So that tells me here that I might anticipate an upside rotation. So if I had a trigger here, let's just look at it here, just theoretically. And here's the consolidation. Let's just look at it. I'm just going to box this up for you so you can kind of see. This is like taking your leftover from the restaurant. We're going to box it up. So here's your volume. Here's your outside edge where the buyers were. The sellers were here. The stop divergence is here. This sets up a long, and all it would do is go there. It's not a long I can take. Remember, I can't do VWAP to VWAP. I have no trade. So I have nothing here, but I'm showing you the structure. So that's what suggested an upside rotation to me. But I have nothing to do. Anyway, I hope that's useful, Ben. So you have support there. You have support here, and this is resistance. It's an attractor. So the market, in theory, can come back here, and come out the top. Statistically, we are favoring a break of the top. However, two-sided trade, so it could go either side. And again, it's not my thing. So at the end of the day, if a trader's been really active in this and they've got nothing for it, or they have lost dollars on the day, then they don't have an edge. So you have to look at the collective thing. The other part of these is the range. Range is an important part of this because in this context, you have to be outside in trading, not inside out trading. That's why you cannot trade this. Or you can, I can't. And if this yellow line was not here, this is a short. But so I have no trades. So I'm just sitting here looking at it just like you are. And if you're trading it, then you just have to follow your plan and get risk neutral is job number one, and then go from there. Do you guys have questions? Give a thumb up also if you're visiting in YouTube. Well, first, it could go either side. It's two-sided rotation, so all these targets are viable. The upside target, which has more of an edge because of the IB30, that's all, and other stats. And then we have this also. This is a potential target down here. So we've got this and this. We're bracketed by targets here. We do know the market is long, so the possibility exists we're going to come out the bottom also, and then come back and squeeze the other side. It's two-sided trade. So if I was getting the question, which is which, well, pick one, because there's nothing more than maybe on these, and it's either going to be outside, take out the longs, then come back in, come back up, come out the top. I think the probability is we take out the first hour's high and low about 30%. Overall, we are leaning to the north statistically, but it doesn't mean we won't take out the first hour's low and then maybe later on take the shorts out and take out this high. So in two-sided trade, pick a side and put your helmet on. How we doing in YouTube, guys? VWAP is right there. Wherever it is. This is the VWAP, and the mid is right under it. Volume point of control is here. This is pretty much balanced. This is two-sided trade. So that's all you got. VPOC migration. So you can see how the volume point of control is moving around. There's no consensus here. So that's why it's moving around, and that's why we're in a balanced trade, two-sided trade. So now it looks like we're going to get those longs out. And that sets up, depending on, and this is not a recommendation, the idea of this condition is for it to take the stops. If we get under the low of the day, take it out, and then come back in, potentially it sets up mean reversion, which would be a long back to here, a long potentially to here, and then potentially out the top. That's the trade. And it's not a recommendation because this is up for grabs. You could just flip a coin on this. This is a specific condition, and we go over this in TraderLab. And this undo hurts a lot of traders because they, all of us, by the way, nobody's immune to this. You really need, we have a separate trade plan for this in TraderLab. It's called mean reversion. It's outside in trading. It's not inside out. So we don't get involved at the VWAP and the mid. None of these are qualified in this condition. The condition of the market is outside in, rotational trading. So if we come out the bottom, then if we get an indication that we're going to mean revert again, what we're doing is taking stops out on both sides. So if we can take the longs out, and then we take out the longs, and then we get sellers trapped down here so they're absorbed, then we can come back here. So that's the next trade, subject to what happens. And it's not a recommendation. That's pretty much what this is. Trading is waiting. Sometimes you just got to wait or not trade. Specific questions, guys. This is mean reversion. Candlestick, you should see the VWAP. Did you find it? Well, there's been, as far as the maximum loss, let's say a loss limit, every individual trader sets their loss limit based on their account size, number of contracts, and you have to calculate that. Some traders, you take 3 stops in a row, that's enough. Others more. It's really a function of account size. As far as stops go, I typically put my stop where the trade fails. And by failure is not at, like, if I sold here, it's not going to be there. It's going to be above this because this is where the short is. If I took it, which I didn't take it. And now we are looking for, I think we tagged the overnight mid before. So that is our current low. This is our target coming down, this and this. If we come out here and then come back inside, I might, and this is not a recommendation, be looking for a long, but this is where it's going to go. And then it has to cross this because there's going to be stops here and then back to here and then out the top. Maybe. I can't tell you about the top. I can't tell you about any of it. I can only say this is a trade plan. This is our target. We haven't touched it yet. So, and I don't believe we got the, no, we didn't get the IB low. But everybody, but everybody has to have a loss limit. You know, if you have a day like today, and you could get really into revenge trading on a day like this, because on a day like this, you could get just cut 1,000, slivers. Because if you don't have discipline to wait for the outside and you trade in here, it's just very easy to get squeezed out. Or let's say you got long here. Thinking, remember, I was saying, don't do the VWAP to VPOC. This is not a directional market. So if you went long here, toast. This is the outside edge, and we haven't taken out the first hour's low. So there's nothing to do here. And where's the mean? The mean is sitting there. So right here, there's an iceberg sitting there. There's just nothing here. So we just got to sit and wait. So we're going to wait because that's our job as traders. Wait. And sometimes we don't want to wait. Just remember, we're not punching a time clock here. We're waiting for an edge. If you don't have an edge, you don't play. That's it. Casinos don't make up games because nobody's at the table and say, hey, let's go make up a new game. Maybe we'll get somebody to come and gamble. They don't do it. We can't do it either unless you want to gamble. Then that's okay. But I always say if you're going to gamble, go to a casino, get the cocktails, and make sure you get the ticket to the buffet. Notice where we came. This is an outside edge. This is support. This came from last time we were here. Let me show it to you if I can find it. Wow. Here. So this consolidation is what created the support. This tested the support. This is the resistance. Next resistance. Resistance. Not my kind of trade. Support. So I can look at these, and if I choose, if I get a trigger, you can take them. But where are you going? So let's look at this. If you got this trigger and you bought this here, your stop needs to be below this. Not a trade I would take. Why? The yellow line is right here. So I cannot take a long here. If I come out here, I know I can take the bottom out and then come back in. So I don't have a trade here. My trade, if it shows up, it's called the IB failure. Not a recommendation. It's in those 60 PDFs that you can all download. So nothing's still here. This is the target. If we come out the bottom and come back in, this is where the target is to scale. Then the idea of this is to come across because we're in two-sided trade. Now, we didn't take the first hour's low out. Nothing to do. Just nothing. Park. So we'll see what it does. So for me, if we come out the bottom, I'm looking for a long. If we come out the top and we fail after we squeeze, I'm looking for a short. I'm not doing anything in here. That's my trade plan. I'm not saying it's good. I'm just saying that's that. Yeah, Ben, Bookmap's VWAP is regular VWAP. It resets at RTH open, and no, it's just the same old thing. The and it really, what a VWAP is really very similar to a VPOC. This is the volume weighted average price, and this is the highest price, or volume, I should say. This is the average volume, sellers on top, buyers average on the bottom. This is the volume point of control. All this is the highest volume for the developing time frame so far. They both have meaning. You can use them a little bit differently, but they're pretty similar as far as what they represent. A bit different, but not material really, in the sense of subject to how you define them and use them in a trade plan. I use both of them, but for me to use the VWAP, I have to be in a directional market. Other than I do pay attention to it, but I do have specific trade setups for it that are in the Trader Lab. It is not. We don't have it here. So I am still looking for this to come out the bottom. So I have no long here. But let me tell you how I would use this. If I was in a short, I'd be targeting this, I'd be looking at these. And I might very well take a scale here and then be holding. So, but I cannot initiate in the middle. So I have nothing to do. Because this is the mean. So the way it works is the market can come back to the mean, and it can do the following. It can come down here, take out the longs because this is here. These shorts sellers were absorbed. That's why you got this. These buyers are absorbed here. You see the absorption? So there's buyers, 638 icebergs here who took the other side of these buyers. Down here, we had some buying icebergs into these sellers. So these sellers were absorbed, these buyers were absorbed. So you've got it bracketed with behavior on both sides. Here we have absorption. These sellers were absorbed. So this is just not a place I care to be involved in. So let's watch it. See if we get a trade. And again, these aren't recommendations. I always want to say, for me, if it just doesn't seem right to me, in other words, it doesn't really fit, I have my parameters for a trader really spelled out. It needs range. I need to understand the context. I have to be looking at where the swings are. You always have to look left because swings have what? Stops. Stops are here. Stops are under the current low. Both of those are equal opportunity. If you had taken a long here, you would have taken a stop. You take a long here, you're right above the low of the day. For me, no. It just doesn't matter. So I don't have any trades here. Just the way it is. I'm going to show you something while we're waiting. There's a Pro Trader webinar series all week. It's only in Discord. If you're visiting in YouTube, there is no cost to visit the Bookmap Discord Trader Lab and also to access these Pro Trader webinar series, which is all week. And these guys are going to show how they use order flow in their process, also specific setups and trade management. And if you're interested in seeing some other professional traders, what they do, you might want to stop in. All you need to do is click the link in the bottom of YouTube and verify your Discord email. We do require that. Keeps the spam down. All popular spam. You guys have questions, please ask. First, I think either side for the IBF on this one. We're in balance. We could very well have a neutral day. The market is consolidating. It really is. We're consolidating last week. I see no urgency here, just drift. So you'll notice it's just pretty much algos and us. The higher time frame participants, at least at the moment, are not doing anything. So it's a really just slow, easy to get chopped up and lose dollars in this. I find it's harder to trade this condition than it is, moving markets. I mean, there's more range, more payoff. You can get your 20, 30 point swings. That, and for me at least, that's really where the dollars are. When you get into short-term trading, and I always say this because I always like to repeat this, my risk is pretty constant. 2.5 points, maybe three. If I'm making a 15, 20 point move with that risk, it pays. If I'm using the same risk to go, what, 2 points, 3 points for that risk, how does that pay? So I don't. Um, in this scenario, I have to be outside. So I have the range to make it pay for me. And I will take, it doesn't matter, I still will take stops, but I'm not trading for action. At least I'm not, and some do. And if they're good at it and they have an edge, that's fine. But at the end of the day, what's the bottom line? Where's the edge? Everybody has their own edge. So the question is, would I take an IBF? Yes, that's the trade I have in this context. Is IBFs are the primary trade for me. I got to stay out of the middle. I got to do outside edges. So it's only outside mean reversion. And the IBF, guys, you guys know, everybody, if you're listening, the IB is the first hour's high and low. Right now, there's a 30% probability we'll take them both out. If we take the bottom one out, I think that's pretty good because we have some good statistics sitting above us here that this one, I should say, this has a high probability of getting taken out. It's somewhere about 65 to 70% probability, I think. And I'm not quoted. Don't quote me on that. You have to bet everything for yourself. But these statistics are available in the Bookmap Discord Trader Lab. So I'm leaning to the north side, but I would kind of be okay if it falls out and takes the longs out and exhausts, and then the shorts become the fuel to take me back to the upside and squeeze them out. That's kind of the plan. So for me, it's whichever side I take out first, I'm looking to fade to come back here. I hope that makes sense. So I have nothing else to do. I can't trade in the middle. I got to trade on the outside edges. So first, yeah, either one. You could take it from either side, in my opinion. I can't recommend it because I certainly have no idea what the outcome is going to be, as you guys know. While we're sitting here, let me show you guys this. As you guys know, if you're visiting in YouTube, there's 60 PDFs of these trades you can download. And even the trades we're discussing here today, let me see if I can find what I'm discussing here today. By the way, Ben, I think you were asking me about icebergs and all. There's a lot of stuff here about icebergs, what they mean, the behavior. There's a lot of that. Large icebergs, what is the scenario? These are actual trades or simulated ones I put on and screenshots. I did this many years ago. Let me see if I can see it. Like here, this is I think a dual IBF. So there's so many of these, and you could everybody. You guys can have these. There's no cost for these, and you isolate one, and then you make it yours. You figure out why does it work, when does it work, when doesn't it work, and what's the probability. So there's NQ in here. I used to trade NQ quite a bit. Now I focus on ES for the room. Um, so this is like 2020 and all that kind of stuff. Anyway, you guys can have that. There's a link in the bottom of YouTube. You can access the Bookmap Discord Trader Lab community. It's a community of like-minded traders who come together to leverage their experience. It's a team effort, guys. You want to be in this business, you got to be in a community. You need support. You need to be able to post your stuff, ask questions, leverage with other traders who are serious about this. This is not a trade calling room. The thing about trading is you got to kind of find what speaks to you. I can help you guys understand how the market works, why it does what it does. I don't use any indicators because I'm try to get as close as I can to the language of the market. Indicators are translators, and that's fine. But I find that if you have too many indicators going, looking for certainty, you're going to have conflict, ambiguity, and inconsistency. So I had to get rid of all those many years ago now because I was inconsistent. So we're still looking for one side or the other to break. And statistically, there's over 90% probability we'll take out either the first hour's high or low. Statistics favored the upside, but the market is long. So how do we put those pieces together? Market favors the upside statistically. However, the market is long. So where's the stops? Under here. This is also a target. That's a target. So we have a couple of things going on, right? So we have to kind of just let it kind of shake out. This is a target also, 85, right here. So we might have already achieved this. You see, this is the thing we don't know, part of the joy. So we have this, which has a high probability, that actually, and we might, for all I know, it's done. And then we have the low, which is here, and we're looking for this. So either side. So my job is to sit here and wait. The market is long. I think we're going to come out this side. And then if we come back in, we're looking for this. And then maybe out the top or not. But the primary target to get risk neutral is going to be this yellow line. It's called the developing volume point of control. And why might that happen? Sell stops, come on out. And if we exhaust, and it could go anywhere, remember, nobody has a monopoly on knowing anything. So this was support, and there's stops below this. So the idea is to take these guys out. Let's see what it does. Please give a thumb up if you're visiting in YouTube. Remember, it's not up to us to make the market do whatever. Our job is to try to get in alignment with it when it offers us an opportunity. If there is no opportunity that gives us an edge, then our job is not to throw dollars away, just to keep busy. If you find you're compelled to look for trades, that's a whole different psychological issue, and you do need to address it. You can come to Trader Lab. We talk about all this kind of stuff because this is the stuff that undoes retail traders. First, I just take the trades. I just let it go and go for there. You pick your trade, you put it on, and then you make it becomes a statistic. I am not trading here, right? So I have to have one side or the other come out. So I'm not trading in the middle. And because the short did not qualify, wherever that was up here, I did not take it, and that's fine with me. At the end of the day, it's not, it's not one trade. For me, it's all of them. So when I don't take a trade and it does something like this, emotionally, what's that word in my head? The voice in my head says you should have taken it. But my experience says, no, you shouldn't take it because it's all part of that random outcome. And there's no edge for your plan. You don't take it. That's what keeps you in the business, not whatever happens on any random event. Hard to differentiate that when you're sitting here and you think, oh, I could have. Everything is clear in hindsight. So for me, I just don't worry about it anymore. Notice what we're doing. So do not, in my opinion, trade here. There's no trade in the middle. So if you're in Trader Lab, you only have one trade plan for today. And that is, right now, it's mean reversion. Looking for it to take out either the first hour high or low. That is it. Then the trades, there's two trades that can come out of those. You can either fade and mean revert once the extreme is in, for it to revert back inside, which is what you're seeing it do here. Revert, revert. And you notice how this is bumping all over the place? There's no consensus. It's just auctioning, two-sided trade. So if we come outside, unless there's a change, when it comes back inside, it's the same trade. It's just from outside edges. So that's it. So for me, unless there's a change, I've only got fades, reversion trades at the moment. Tillotson, you're asking me if it breaks out, would I go with it as a breakout trade? No, I would not. Well, it doesn't mean I can't. What it means is that's not the condition of the market at the moment. The condition of the market is two-sided trade, and nobody is running with the ball, if you notice. So I don't look at it as if we had a breakout. To me, the breakout's going to be the stops on opposite ends of the market. And then the breakout traders will get potentially trapped because they're going to buy the breakout. That's what they do. And if there's no continuation buying above the outside edges or selling below the outside edge, and we get the sellers in the breakouts, they get absorbed and then they get squeezed out. That's what I'm looking for here. So for me, unless things change, which they can, I'm looking for long here. But it has to be outside. It can't be right here. It's got to. I'd like to see it come out, then come out here, check, find an excess, and then come back here. So no, there's no breakout trade for me. By the way, guys, if you're in the Bookmap Discord Trader Lab, welcome if you're new. Remember, there's a library of webinars in there, and you can download those 60 PDFs of the structured trades so you can reverse engineer and make them your own. The Trader Lab is about the business of trading. It's not for the action, and it's not, 6 months you become a whirling dervish and now you're a trader. That is nonsense. If you want to be in this business, it's like an apprenticeship. You've got to put time in. You got to develop your skills. You've got to learn how to differentiate your behavior from most other retail traders who do not sustain a career in this business. They're on their way out before they even start, and unfortunately, they don't even know it. Everybody seeks the easy way. If you're going to compete here, there's no easy. If anything, it's not easy. It's very hard. And it's not hard to learn to trade. It's hard to change your beliefs about what this business is. This is a gaming business. It is not a predictive business. And you might think they're kind of the same, but they're really not. You're putting your effort into being right and avoiding the pain of loss, which I understand why you do too. That's not where this business operates in. There's loads of pain. The pain is cost of production and overhead. How can you have a business that doesn't pay expenses? Casinos understand that, but they don't make the games up or use variable inputs. They're just doing it one way. Any game they play is always the same. Why don't we do the same thing? Well, in Trader Lab, you do that. If you want to have an opportunity, in my opinion, to sustain yourself in this business, because you have to know what you're in. You got to know the business. Then you need to understand who you're competing against. You have to understand their behavior. And if you want to know what your competition is doing, just think about what you're doing. Write this down. Think like a retail trader. Don't act like one. The experience you've gleaned can be, it's trapped equity. You've made an investment in experience. The problem I believe we have is because of the randomness of this market and this business is we can have a winning trade if we just close our eyes and push buy or sell. Doesn't matter. That you're going to have winning trades. So when we see winning trades, we're always going to try to get more winning trades. How are you going to do that? Optimization, curve fitting, multiple indicators, multiple time frames. Human nature. I get it. You do too. However, does it work? No, not for most. Maybe it will for you. I know we're all exceptional beings, but statistically, it doesn't work for retail traders, and yet they're all doing the same thing or chasing the latest secret sauce. Now it's AI. No, it's not. There's always been a gimmick. I started in 1980, and the reason I want to say that is I've seen this stuff all the time, going back even then. And it's always the latest, best, new, whatever, shiny this. And everybody rushes to the other side of the boat. Uh, and it's always the same result. And that's trapped equity. If you've had that experience and you're still doing it, then maybe it's time to, well, think about your investment and can you reap some kind of yield? If it can't make you a successful trader, or if it hasn't, then what can you get from it? Maybe not doing a process that doesn't work, because maybe the process you're doing is not aligned with the business. Something to think about. And I'm not saying this is you, I'm saying this is most retail traders. And everybody's exceptional, I get it. Except we all believe we're exceptional, and actually we are. Our fight and flight mechanism, our belief systems are all predicated on the things that work in the outside world. They don't work here. So if you've been successful, you're going to come with that motivation and drive and beliefs of what you are going to do to become successful. Question becomes, what if what you're doing to become successful doesn't fit here in this world? This is, I always think of this like being on Mars. Gravity is different, everything is different, everything. The environment's completely foreign, and trading is one of those foreign environments. But we believe we're still on Earth. We're not. Remember how the casinos operate. Write that down. If you're not sure about this business, you might want to be thinking about the gaming business and how it works, because that's our business. We can't predict. What we can do is only interact when we have a statistical edge. That's all you can do. So let's see what we're going to do here. I have nothing to do yet. If you've been trying to trade in this, have you been getting chopped up? Dinosaur person, I have no trades here. There's nothing here for me to trade. So it doesn't matter to me, because I have no range here and I have all my stops are sitting below the low of the day. My goal, and again, just me, is to come out because the market is long. So the sell stops are under the market. And if we take out settlements around 62 quarter, I think it is, the ETH mid at 63 half is the current low. Stops are sitting here. This is a target, naked volume point of control. This is about 70% probability-ish, give or take. Past performance, not indicative of future results. You got to vet this. I'm looking for this. And it's not a wall. If I come under here and I come back across, I'm going to be looking for a long to here. That's my trade. And in the meantime, I just sit here and work on my crochet. That's my trade. And here's the other thing. If it comes down here, it can drop and go wherever, and I'll take a stop. I'm okay with that. That's just the way it is. It's just one trade. So that's my trade. No, I would not be taking a long here. Sorry, Mogi, I can't look at NQ at the moment. I can look at it, but I certainly can't analyze it for you because I'm not watching it. And I don't have levels on it. So if you come to Trader Lab, we do have traders that are very active at NQ. And they've basically taken this process and they overlay it. By the way, this process, this is auction market theory using a volume profile. And this works on everything. Any market, any time frame. Swing trading, ETFs, stocks. This just happens to be the ES because it's a good market because of its depth. But if you, anything, doesn't matter. So now we're going for our, remember, to come out the bottom. That's our trade. So it's not our trade. I should say our trade is to let it come out the bottom. And then we're going to be looking for mean reversion longs. This is important down here. So we want to kind of see this area. And these are not trade recommendations. There you go. Okay, now we want to watch. Okay, keep an eye now. This is not a recommendation. We are right here is a potential long in here. Let me get this microstructure here, and you've got this. So now if you get a pullback, you want to be looking at behavior on a potential rotation. And this is not a trade recommendation. Micro volume is right there. So you want to be looking in this area. So now we're going to watch, and there's micro volume here. Doesn't mean we won't take this out. So let's just watch it right in here. So I see there's a seller here, sellers are here, seller is here. Absorption was here. So we're going to watch this area here. And if we get a trigger, and this is not a recommendation, this is the scale. Let's see what it does. So this is an area to observe. That's as deep as I go with this. Sellers are here. So we want to see the behavior now. Sellers are here, sellers are here, sellers are here, buyers are down here. So we want to see the behavior. Sellers are here. Let's watch. These guys are absorbed. These guys were absorbed. This is your support. We're going to watch. I don't think we hit this yet, did we? No. So this is important also. Support is here. Support is here. Resistance is here. Buyers are here. Buyers are here. So let's watch very carefully. See if we can get above these sellers. Let's observe together. Remember, these aren't trade recommendations. Everybody takes stops. The thing about this is, this is called the IB failure. It is a mean reversion trade. We take stops all the time, so there's no holy grail. Let's see what it does. This is a structured trade. Now, the bit of a challenge about this is also a target. So, but this is the mean reversion trade, okay? Is everybody tracking? I know you had to sit and wait all morning probably for this, but this is Trader Lab. I mean, win, lose, draw. I mean, it's one trade. Are you guys getting something out of this? There is no trend here today, Zoltan. So what did we say? We are waiting in a mean reversion specific configuration. It is only outside in trading. We were going to wait for the first hour's high or low and then take a mean reversion trade back to there. This is your long, and you're going for this. Now, your choices, subject to your trade plan, are the distance from entry to failure. You would scale, or up to here. And I usually give it 2 ticks. So long, stop, 2 ticks ahead of this thing. And then, so the scale could be out here, all up to you. And then coming out the top, theoretically anyway. That's the trade. So we're going for this, and then that's the trade. So for me, this is my long. And while I'm sitting here, I have nothing to do. Now, and this is really about the business of trading. What is the business of trading? Waiting for your trade. What else is it? Gaming. Waiting for a trade that has an edge. This long has an edge. Trading in the middle, not so much. Getting long here, not so much. Getting long here, not so much. Getting long out here, yes. Then what else? Anything can happen. If it comes out under here, this is the next target. If I get stopped out and I come out and I come back in, it's the same trade. Put the trade back on again, coming back here. That's what I know. That's as deep as this is, and this is a structured trade. This is what we do in TraderLab. I know if you guys were looking for something more exciting, there's no excitement here. We have excitement, but this is not it. This is patience, plan, intentional trading, waiting. It's like being a hunter. You're just sitting and waiting. You're not chasing after anything that makes a movement. You're waiting. Because if I'm going to take risk, I have to get paid. And I can get paid if I can get back here. That's like 7 or 8 points. That pays. And then if I can come across, come out the top, which may or may not happen, that pays. How many of those do you need? You see, that's kind of how I look at it. And I'll trade as actively as the market gives me an opportunity. That's just basically the way I do it. So now let's look. We have our support here and here. So let's see what happens. Iceberg is there. Sellers were absorbed here and here. This is your support. This is also support. So we want to see what happens in here. There's absorption. If we can clear this, then we might get here. If we can't get back above this, then we can always fall out the bottom. Always. Let's watch it. You guys have questions. Why don't you post them? I've got a couple more minutes. And please don't forget, there's special Pro Trader webinars this week in the Bookmap Discord server. You are all personally invited by me to attend. There's no cost. You do need to confirm your Discord email so we make sure you're not that wonderful spam that we talk about. Notice where the support came in. I don't use indicators. Why don't I use them? Because I read the order flow, and that tells me in alignment with volume. Remember what this is. This is shopping. That's too high. That's too low. That's retail, high volume, right here. So if I find too high, which theoretically, this is a retail price, in theory, I always have to say the word theory because that's why we call this auction market theory. This is retail. This is shopping. If this is on sale and this is the retail price, you go to the supermarket, they got the tuna on sale at 65 cents a can. Retail is $1. If it comes out to 65 cents and you perceive it below retail, you throw a couple extra in the cart. Well, if I come back outside and the buyers that absorbed here and these guys who got absorbed, if they think this is a good price, really? I can still get it? It's now 75 cents a can and it's $1 up there? I'm buying it here. Then where might we go? Here. That's why this is called mean reversion. That's why we're trying to go here. And if we can get here and cross over, then we're going to squeeze the shorts out. That's all I can tell you. But we got to clear this micro volume right there. Final questions. I got 5 minutes to go. Please give a thumb up in YouTube. And by the way, This stream is available exclusively to Bookmap Discord Trader Lab participants, as well as the Trader Lab community. And don't forget, if you're visiting in YouTube, there is a link in the bottom of YouTube. You can click the link, come to the Bookmap Discord Trader Lab. There is no cost. And it's also a community, full-time community. It's a global community of like-minded traders that have come together to leverage their collective experience. We have traders trading all over the place. You hang out in the ETH, we have traders trading ETH all over. So feel free to come and visit. It's a serious community. It's about the business of trading. So there's no trade calling. That's a waste of your time. Even what I'm doing, it's taking what you see and then saying, okay, how can I integrate this into my psychology? Everybody is different. We have some traders in Trader Lab put a trade on and go to the gym. We have other traders in Trader Lab only trade the first couple hours, a little bit of ETH, and then off they go to their full-time jobs. Other traders leave their full-time jobs and then do this full-time. It's all about building out the business. You can build the business if you understand what the business is, and then develop the discipline to basically educate yourself. You have a lot of trapped equity. I call it trapped equity because the equity is the dollars you've thrown at the market and no longer have in your hands. It's trapped. Now, the thing is, there's experience in that investment. And the thing about it is, if you're getting an education, even if you're not successful with it, you are learning something. Most of us tend to keep persisting because we think it's a matter of persistence. It may not have to do with your persistence. It may have to do with your process and your belief system that more indicators, more time frames create certainty. And if that's your belief, that's not the answer. That's actually part of the problem that's keeping you from moving forward, at least in my opinion, because it was my experience. And I'm going on 45 years, so I've got some experience. That means I've had more time to do what you're doing. And I've done it on steroids. I built trading systems and other things. So, because I managed across a lot of asset classes. So I have experience. And the thing about my experience is that it's the same as yours. That's the irony of all this. Time in and of itself does not solve the problem. It's beliefs and process that need to be discussed and understood. Remember, we have this just in case. If we take this out, we come here. And I can tell you already, if we take out this low, I am still looking for a long back there, unless this thing does the Acapulco cliff dive. Just saying. And it's not a trade recommendation. So let's look at what happened here. This is our support. There is absorption. There was absorption here. There's absorption here. There's absorption going on here. We can break high, we go here. If we can't break high, we might test here. We might even pop under and come in. All of these are potential longs, not recommendations. They're longs. This was the actual long right here. Notice? You guys can watch this. I'm out of time, guys. So I want to remind you about this. Click the link if you're in the bottom of YouTube. You can come and be our guest, no cost. You do have to confirm your Discord email. Also, you can come to Bookmap Discord Trader Lab community, download the 60 PDFs of structured trades, access the library of webinars where you can see this in detail over and over and over. Also, these streams are available exclusively to Bookmap Discord Trader Lab participants, as well as a library of webinars. Let me go take a look at this long and see how it's going. I am out of time. This is Trader Lab, guys, and I hope you got something from today. If you're in YouTube, please subscribe to the channel. Also, give a thumb up down at the bottom there and copy this link. You might be able to watch it again if you're interested. Also, send it over to your buddies who are traders. They might get something from it, and let them know they're also invited to visit the Bookmap Discord Trader Lab community. Thanks again, guys. And I'm going to put this link in the Trader Lab. So you guys in Trader Lab, you can access this when you do your screenshots, homework, and reverse engineer what you see. Thanks again, guys. Have a great day. See you tomorrow.